Hello, welcome to my channel today. This is a King's Tutor. This is the first time of joining us. Ensure you like, comment, share, and subscribe to this channel. Now, we want to see the branch account. The branch account is an important aspect of accounting. Okay. Now, before we proceed to the accounting aspect of the branch, now what is a branch or what is a branch? Now, a branch can be seen as a unit or a segment of a business operation that is operating with some level of independence. Okay, they are not necessarily located with in the same premises as the head office. Okay, now for instance, if we have a company named let's say MTN. Let's say MTN, for instance, is a global company. Now, MTN has its head office, okay, and have various branches in different countries. Okay, so the branch, like we said, is a unit or segment of a business operation that is not located in the same premises as the head office. Okay, and sometimes they operate in some level of independence. Okay, so that is a branch. Now, a branch is somehow different from department or departmental accounting. We have done departmental accounting. You have not seen that, ensure you check in the description. Okay, I will drop it there. Now, what is the importance of this branch? Because most time, the reason why some firms have branches, one of the reasons why they have branches is to ensure for access to wider markets. Okay, now a firm might be operating, let's say, in Nigeria, but they want to reach other countries or other location. So therefore, they might want to ensure they have branches in this location. One of the most reason why they have branches is to have access to wider markets in order to meet more customers and to have more profit. Okay, so let's see the importance of branch account. What is the importance? Why is it that firms would ensure that they have branches beyond their head office? Now, one of the importance is it ensures the firm to know the branch that is making more profit or loss. Now, one of the reasons why they will have a branch account for each of the branches is to ensure that they know the branch that is making profit or loss. Okay, that's one of the branch. The second one is also to ensure that they reward more efficient branch. They reward the manager, okay, that is doing good job. They reward them in order to ensure that they are rewarded. Okay, now branch account prevent wastages and fraud from the staff. Okay, knowing fully well that they take track of records of each of the branch activities. Okay, it prevents wastages and fraud from the staff. Another importance is that it ensures proper control of the branch by the head office. Okay, because there are some times in which the head office might prepare accounts on behalf of the branch. We're going to see that. So it ensures a proper control of the branch by the head office. Okay, so that is the branch. Now, the branch is different from the branch is different from departmental account. Now, we have seen departmental account. Departmental. Now, we said a departmental account is an account that is prepared for each department. We said departmental account have one head office but different department under the same roof. Okay, but for a branch account, it is not, or for a branch, it is not located in the same premises as the head office. But for department, they are under one roof. Okay, that's one of the major reasons. Now you can see branches in different locations, but for departments, they are under the same roof and located in the same premises. Okay, so now for the branch account, now we have three divisions of the branch account. We have three divisions of the branch account. Okay, now we have three divisions of the branch account. Now the first one is called the non-independent branches. Non-independent branches, or it is also known as dependent branches. While the second one is called the independent branches. or the autonomous branches. While the third one is called the foreign branches. Okay? So these are the three divisions of a branch. Okay? We have the non-independent, or what we call the dependent branches, or the non-autonomous branch. Okay? While the second one is the independent branch, or the autonomous branches, while the third one is the foreign branches. Now we are going to see them one after the other. Now, what is the non-independent branches or the dependent branches? Now, this is a situation whereby that branch do not have a say or take decision, or cannot take decision on its own. They are dependent on the head office. Okay, now let's say for instance the MTN we have used. Now if they have a non-independent branches, it means that branch cannot make decision on its own. It has to take decision from the head office. That is why we say it is non-independent. They cannot stand on their own. They are dependent or depends on the head office for majority of its activities. Okay, now another type we said is the independent branches or the autonomous branches. Now the independent or autonomous branches is the type of branch that depends on its own. They are independent. They can take decision on their own without, they can take some level of decision on their own without consulting the head office. Okay, they can keep some accounting records on their own without interference from the head office. So that is the independent or autonomous. It means they are or they have autonomy. Okay, while the foreign branches are branches that are beyond the four walls of a geographical area of the head office. Probably if a head office is in Nigeria, a foreign branches can either be in Ghana or in Kenya or Zambia or in America. Okay, so these are the three divisions of a branch account or a branch. Now, having seen the three divisions of the branches, now let's see in detail what the non-independent branches or the dependent branching means. Okay, now like we said before, the first division, which is the non-independent branch, in brackets, where the head office maintains account. Okay, so the non-independent branches is that branch where the head office wholly or majorly prepare its financial account, prepare account on their behalf. Okay, so like we said before, most of the activities that goes through that branch, they take decision. Now, if it is a branch that makes or that sells item, they get stock from the head office. Okay, they get stock from the head office. They do not do anything without getting quite permission from the head office. Okay, so that is the non-independent. That is where the head office maintains the account. Now, in this situation now, if it's a branch exists such that the head office controls it, that means the head office prepares account on their behalf. It means the branch manager would have to be sending details of activities and transactions back to the head office at intervals. Okay, because the head office keeps and maintains account on their behalf. Okay, so the head office in this regard now transfer goods to them at different pricing method. Okay, because they cannot take decision on their own. So the head office can transfer goods to them at different pricing method. Basically, three types of pricing method. Now, the first one, that's the pricing method. The first one is on cost price. The second one is on cost plus a percentage, which is also known as markup. Then the third one is at selling price. Okay, now these are three basic method, pricing method, in which this the head office can transfer stock or goods to the branch. for them to sell. Now the first one, they can transfer at cost price. It means that the head office transfer these goods at cost price to the branch. So the branch can fix their selling price to make sales. Now in this situation, it is good for perishable perishable goods. Why? Because the duration at which from when it is sent and when they receive it, there might be some incident that might happen. So the head office, it is not wise for them to fix a selling price. So the head office can transfer goods to them at cost price. Now another one is cost plus a percentage. Now most time the head office can also transfer goods to the branch at a cost plus a particular percentage. It will be given in the question. Okay, while the third one, they can transfer goods at selling price. It means that if they transfer it at selling price, that is the price that the firm is supposed to sell that particular goods. Okay, now this aspect of the selling price, they use it as an internal control measure to control and the activities there, to know what they make as sales. Because if they are selling at a cost price to the branch, now the branch can make sales. Fraud can happen here. Okay, the branch can make sales at a particular amount and report that look at the certain amount they make that particular sales. Okay, so these are the three basic methods where three pricing method whereby the head office can transfer goods to the branch. Okay, so let's see the first one, which is the cost method. Let's see the cost method. Okay, now the first pricing method we said is the cost price method. Now under the cost price method, now goods are sent by the head office on cost. Like we said, they send it on cost, and it is suitable for a perishable goods. Okay. Now the accounting, the books of accounts that is needed under this method is the first one. The books to be prepared under this method. The first one is what we call the branch stock account. The second one is the goods sent to branch. The third one is the branch debtors account. The fourth one is the cash account. Fifth one is the profit or loss account. Now these 5 books should be maintained when it comes to the cost price method. Now like we said before, that the cost price method, we have 3 pricing methods where the head office can send goods to the branch. We said the first one is cost price, the second one is cost price plus markup plus a certain percentage, while the third one is selling price. Okay, now the cost under the cost price method, we said here the head office send goods to the branch at a cost of that goods. Okay, so the branch is to fix the selling price. Okay, now the books to be prepared, that is the books to be maintained under this method, we said the first one is the branch stock account, the second one is the goods sent to branch account, the third one is the branch debtors account, the fourth one is the cash account, the fifth one is the profit or loss account. Okay, now the first one, the branch stock account. Now the branch stock account is like a trading account of a sole trader. Okay, the branch stock account is the trading account of a sole trader. It's like a trading account of what? A sole trader, where you get the what? That gross profit. Now in this account, you record all items that concerns the what? The branch there. Now in the credit side, you record what they give out in terms of credit sales, card sales, their returns, okay, or goods stolen or cash stolen. Everything they are giving out in terms of value is being what recorded there at the credit side of the branch stock, while whatever they are receiving is being what debited to the branch stock account. Okay, so that is the branch stock account. Now in this branch stock account, at the end of it, you close it and the balance there will give a gross profit. When the credit side is greater than the debit side, the value you get as a balancing figure is the gross profit. Okay, while the goods sent to branch, now the goods sent to branch account is the one that is used by the head office. It is recorded on behalf of what? The head office, when they are selling goods towards the branch. Okay, you credit it with the value of the goods they are sending to the branch, while you debit it when the branch return a particular goods to them. Okay, now the balancing figure of this gives what is recorded to the purchases. Okay, while the third one, the branch debtors account, now it records every item that concerns the branch customer, their debtors, is recorded here. Okay, you debit whatever they are receiving and you credit what they are giving out. While the fourth one is the cash account, and the cash account records everything that concerns cash on behalf of what? The branch. Okay, if also the branch is paying, if the head office is paying an amount on behalf of the branch, if it is done by cash, it should be what? Recorded there. You debit what is received in cash and you credit what is paid in what? In cash. That's the cash account. While the fifth one is the profit or loss account. Now the profit or loss account, this is what we have to get if there is a net profit or a net loss on the branch. Okay, now in this regard, now every expenses will have to come to the debit side, and the branch, remember here we said you close it to the branch gross profit. The branch gross profit is sent what? To the profit or loss account at the credit side. Okay, so now in some transaction, you might be required to prepare the branch expenses. In some books they have the branch expenses. Okay, but it is insignificant in this regard, because we will also close that branch expenses account to the profit or loss account. Okay, or if it is being paid by cash in terms of the expenses, it will also be what recorded as a corresponding entry to what? The cash book. Okay, so let's see the proper accounting entries. Now this is the book to maintain. Let's see the proper accounting entries. What is to be recorded as a debit and what is to be recorded as a credit in all what? The transactions. Okay, so we have the accounting entries. Now, before we proceed, please, if you have not liked, ensure you click on the like button. Please click on the like button. Just comment there. It helps the algorithm. Okay, ensure you like this video. Okay, and you have not subscribed, please subscribe to this channel. Okay, so ensure you also you share this video. Okay, now the accounting entries. Now the first thing we are going to have in terms of this is opening stock at the branch. Okay, the first thing is opening stock at the branch. Now if they give opening stock, if there's a stock that was brought from previous year, it becomes opening stock. Okay, so what do you do to it? You debit it becomes a balance. You debit it to the branch stock account. You debit it to what? The branch stock account. That is when there's opening stock at the branch. Okay, when it's opening stock at the branch, you debit to what? The branch stock account as balance brought down. Okay, now why the second one is goods sent to branch. Okay, goods sent to branch. Now when already have an opening stock, now the goods sent to branch is the goods that's what? That's actually sent to what? The branch. Since we said the branch do not have a say on their own, they have to receive directive from the head office. So the head office will have to send some goods to the branch. So when they send goods to the branch, okay, now the double entry is you have to debit the branch stock and you have to credit the goods sent to branch. Okay, and you do this with the cost, with the cost of the goods. You record this with the cost of the goods. Remember, we are dealing with the cost price method. Okay, so when they send goods to the branch, the debit side is to be recorded what? In the branch stock account. You record it at debit side because they will receive it. The branch will receive the goods. While the credit side, you have to what? Credit the goods sent to branch account. Look at the branch stock, the goods sent to branch account. Okay, now the third one, goods return to head office by branch. Goods returned to head office by branch. Now, the branch, probably due to defective items, goods that was spoiled, they have to return it back to the head office. So what will not be the double entry? It is a reverse of what is done here. So you have to debit goods sent to branch and you credit branch stock account with the amount as with the same cost. Okay, so goods returned to head office by branch. It means that the branch is returning the goods back. So if the branch is returning the goods back, it means the branch stock account will be credited, because we said this is the account that is prepared on behalf of the branch, credited, while the goods sent to the branch is prepared on behalf of the head office. Okay, so they will have to receive the goods that was returned to them. So it is a reverse of this other entry. That is the third one. Now the fourth one, goods return to branch by branch customer. Goods returned to branch by branch customer. Okay, now look up at this point. They said goods returned to branch by branch customer. It means that here the branch customer is returning back the goods to the branch. Okay, probably they have received some they have sold some goods to the customer. The customer is now returning it back to the branch. Now what is the double entry at this time? Now it will be debit the branch stock. Remember we said the branch stock is spread on behalf of the branch. They are receiving the goods from the customer. So debit the branch stock account. Now the credits will now be branch debtors. Remember we said the branch debtors account is prepared on behalf of the customer. So it will now be branch debtors account. Now what will be the amount? With the sales value. With the sales value. Remember at this point now they have sold to the customer. They will not sell to the customer at cost. They will sell to the customer at what is selling price. So when the customer is returning it back, it means they return the goods back and they will have to record it at that what sales value. Okay, so that is the goods returned to branch by the branch customer. Okay, now the next one is goods returned to head office by branch customer. Goods returned to head office by branch customer. Now this part is somehow complicated. Now listen, they say goods returned to head office by branch customer. Now it was not sold to the customer by the head office. It was sold to the customer by the what? The branch. But the customer now, instead of returning to the branch, probably the head office is closer to where he or she is staying. He returns the goods to the head office instead of the branch. Now what will not be the accounting record? Now it will not be, now watch, you have to debit the goods sent to branch, you have to debit the branch stock, and we have to credit the branch debtors account. Okay, so we debit the goods sent to branch, we debit the branch stock, and we credit the branch debtors. Now what are we recording in this item? Now look up. Now they said the goods returned to the head office by the branch customer. Now the head office will only take record of the cost. Remember, they sent it at the cost price. So you are going to get the cost price value. The cost price value, it will be gotten and it will be recorded here. It will be recorded based on the cost price for the head office. Now for the branch stock account, which is on behalf of the branch, you are going to record in terms of the profit. Why the credit entry, which is the branch debtors, it was sold to them at the selling price. So this will not be at a selling price. Okay, now we said the goods sent to branch account, since it is prepared on behalf of the head office, and the head office sent those goods on cost. So they cannot take entry of both what the sales and the profit, because they send the goods. Okay, so they only have a right of the cost. So they will record on the cost since it was sent to them by the customer. While the other entry, debit, will record at the branch stock the profit, because the cost plus profit will give the selling price. So it will record the profits, the branch, while the credit entry will not be recorded in the what? The debtors, the branch debtors on the what? The selling price. Cash sales proceed received from branch. Cash sales proceed received from branch. Now when there is cash sales, okay, when there is cash sales proceed, probably they make sales on cash, so it will not be debit the cash account or the cash book, and you credit the branch stock with the sales value or with the amount. Okay, cash sales proceed received from branch. Okay, so they recorded, they made sales on cash, so definitely if they make sales on cash, you debit the cash account and you credit the branch stock account, since it was the what? The branch that made the what? The sales. Okay, the next one is the credit sales by the branch. The credit sales by the branch. Now since the branch have made sold on credit, so the entry will now be, you debit the branch debtor and you credit the branch stock. Okay, now since this is sales but on credit, it is not on cash, so it can't go to the cash book. Okay, so record it in what? The branch debtors account. It will be debited, while the credit entry is still made by the branch, goes to the branch stock account. Okay, now it will be with the credit sales value. The amount will be with the credit sales value. Okay, that's the seventh one. Now, check or cash received from branch debtors by the head office. Okay, check or cash received from branch debtors by the head office. So the head office received some money, cash or either check from the branch debtors, that is those owing the branch. They receive it as the head office. So what will now be the transaction? You have to debit the cash account or the cash book while you credit the branch debtors. Now, so you record everything that concerns the branch debtors account. It must pass through there also. Since they are the ones giving this amount, so you credit the account, it is going out, while you debit it, the cash account. So the next one, discount allowed to branch debtors. Discount allowed to branch debtors. Now, what will be the entry? Now, they gave discount. Discount is what the reduction in a price that is supposed to be paid by what? The debtors. Okay? So if they gave them discount, so it will now be debit the discount allowed account, and you credit the branch debtors account. Okay, now look up in some text, in some book, in terms of this discount allowed to branch debtors, they will tell you that debit profit or loss account. They are also right. Why? If we debit this, it means we'll open a discount allowed account here. So when we open a discount allowed account here, then we have to close it at the end of the period. And where we are closing it to profit or loss account. So it will still come to a profit or loss account. So should in case you say other way, they say in terms of the discount allowed, debit profit or loss account, it is still correct. Okay? Because you have to close it, it will lastly end in the profit or loss account, which is what? This. So the 10th one, branch bad debt. The branch bad debt. The same way, debit, credit. You debit the bad debt account. You credit the branch debtors account. Okay? With the amount of bad debt. Okay, now in this situation now, bad debt, to say these are what? Irrecoverable debt. Debts that cannot be what? Recovered. Okay, so in this situation now, the branch bad debt is what? Is debited. Okay, so you debit the branch bad debt. Like I said in this one now, in terms of the discount allowed, I said in some situation now, this bad debt may want to be what? Replaced with profit or loss account, because it is bad debt, it is going to the profit or loss account. It is also correct, because if we open a bad debt account also, at the end we'll close it to what? A profit or loss account, which will still come to the profit or loss account debit. Okay, so the branch bad debt, you debit the bad debt account, you credit the branch debtors account. Now the next one, allowances of selling price. Okay, here no double entries required. Okay, because you don't use it for the cost price method when he said allowances of selling price, because it was sent to them at the cost price. Okay, so when you see this, most time in a question, it's just a trick. Don't record it. No double entries required under this cost price method. Okay, now the next one, branch expenses paid by head office. Branch expenses paid by head office. Now you have to debit the branch expenses account on expenses account, and you credit the cash account with the expenses value. Okay, so the branch expenses paid by what? Head office. You debit the expense account and you credit to what? The cash account. Okay, so since it is going to what? The expenses account. Also, this expense account, it will be what? It will be written down, closed down to the what? The profit or loss account. Now the 13th, cash stolen at branch out of cash sales proceed. Cash stolen at branch out of cash sales proceed. Now when they stole cash out of the amount they have already sold, okay, out of cash sales proceed. Now the debit, you debit it to the profit or loss account and you credit it to the branch stock account. That's the branch prepared on behalf of the branch. So when there is cash that is stolen at the branch out of the cash sales proceed, you debit it to what? The profit or loss account, and you credit it to what? To branch stock account. Okay, now also goods stolen at branch. Goods stolen at branch, you debit the profit or loss account and you credit the branch stock account. Okay, now this one is cash stolen at branch. Now this one is goods stolen at what? Branch. You debit the same process. You debit the profit or loss account. You credit to what? The branch stock account. Okay. The last one is closing stock at branch. Okay. So the closing stock at branch, the value is just credited to the branch stock account as balance carried down. Okay, so the closing stock at branch, when there is closing stock at branch, they will state it there. So it is what? You credit it to what? The branch stock account as balance carried down. Okay, so that closing stock is now what will become in the next year, what will become as what? Opening stock. You see, that is what we started as what? Opening stock. Okay, so and it is what? At debit. So this one now, when you are closing it as closing stock, it is what? Credit. Okay, so the closing stock at branch at the end. So this is the transaction that you must see. Every transaction that relates to branch account must fall under all we have seen. Okay, must fall under all we have seen. The first one, opening stock at the branch. We said you debit the branch stock account. Remember, I told you the branch stock account is prepared on behalf of the branch. The goods sent to branch account is prepared on behalf of the head office. This branch debtors consigns everything that concerns the customer, the cash, everything that what is related to cash, and the profit or loss account is used to get the net profit. Okay, while the goods sent to branch, we said a goods is sent to the branch. A goods is sent to the branch by the head office. So the branch is receiving it. That is why we debit the branch stock account. While it is going out, goods sent to branch with a cost, because we are dealing with the cost price method. While the next one, the goods returned to the head office by branch. Debit the goods sent to branch and credit the branch stock account because they are returning it back with the what? The cost. While the next one, goods returned to branch by the branch customer. So they might have sold items to the branch customer by the branch. So the branch customer returned it back. So it is coming back to the branch. So we debit the branch stock account and you credit the branch debtors account with the sales value because they have sold to the customer. So the customer is returning back. That's the sales value now. Okay. While the fifth one is goods returned to head office by branch customer. Now there are some customer that returns goods to the world head office. Instead of returning to the branch where they bought it, they return to the head office. At this situation now, the entries will have to involve the head office because they are receiving the goods, the branch because they are the main owner of the goods that was sold. That they were the custodian of that goods that was sold to the customer, and also the customer. Now it will not be like this. You debit the goods sent to the branch at the cost. The branch will only take responsibility of the cost because it's sent at cost. While the debits, another debit will be for the branch, the profit. Okay, there. Why the credit side will be the branch debtors at the selling price. Okay, so you have to use the knowledge of the markup and margin to get a ratio so that you can get the cost, the profit, and also the selling price. We're going to see that in an example. And also the card sales proceed received from the branch. They make sales as the branch makes sales. The proceed, you debit the cash account, credit the branch stock. Okay, so with the amount. Okay, the next one, the seventh, credit sales by branch. Now since they make sales on credit, it is not on cash. It is not cash, so it will pass through the debtors, branch debtors debit, and you credit branch stock with the amount of the credit sales. The next one is 8, checks and cash received from branch debtors by the head office. They receive it by the head office. You debit the cash account and you credit the branch debtors because they are the ones that pays it. The ninth one is discount allowed to the branch debtors. They allow discount. You debit the discount allowed account, you credit the branch debtors. The next one, the branch bad debt. You debit the bad debt account and you credit the branch debtors account. Allowances of the selling price. I said no entry is made in this regard because it does not involve item that concerns the cost price method. The next one, branch expenses paid by the head office. There are some expenses that is paid by the head office. Since we said it is non-independent, that means the branch depends on the head office. So there are some expenses that do incur. The head office will have to pay it. So once they pay it, you debit the expenses account and you credit the cash account with the expenses value. Now the next one is cash stolen at branch out of cash sales proceed. Cash stolen at branch, you debit the profit or loss account and you credit the branch stock account. Now the next one is goods stolen at branch, and once they stole goods at the branch, is assumed it goes to the profit or loss account and it is credited to the branch stock account. While the last one is a closing stock at branch. Once they have a closing stock, you credit the branch stock account with the value. Okay, so as balance carried down. So this is the accounting entries. Now let's see a typical example on how to solve this. Don't go anywhere, watch to the end. Now please like this video and show you comment if you're following on this, and let's see an example where we can solve this in this accounting entries. Now let's see the example. Okay, now let's see the question. It says the King's Tutor operates from a head office in Sapele and a branch in Warri. Now, goods are sent to the branch at cost. The following are details of the Warri branch for the year ended 31st December 2021. They have opening stock at branch 40,000 naira. I think this should be in naira. Goods sent to branch 360,000. Goods returned to head office by branch 36,000. Credit sales 300,000, cash sales 96,000, authorized allowances of selling prices 4,000, goods returned to branch by branch customer 20,000, Cash discount allowed to branch customer, 10,000. Branch bad debt written off, 8,000. Cash received from branch customers, 200,000. Branch sundry expenses paid by head office, 25,000. Cash stolen at branch, 5,000. Goods stolen at branch, 12,000. Closing stock at branch, 44,000. Required, prepare the ledger accounts for the branch in the head office book. Okay, so we are going to prepare the branch account now using the accounting entries we have seen. Okay, so we are going to start from the first one. Remember, so they said opening stock at branch. Now when we have opening stock, remember in the accounting entries we said opening stock now will be that of will be the branch stock account. At the opening stock, we said it will be the balance brought down to be debited to it, 40,000. Okay, and the next one, goods sent to branch. Now the goods sent to branch, now the double entry will be goods sent to branch. The double entry will be you credit the amount and debit the branch stock account. So the goods to branch now will be the branch stock, because it is going there as 360,000. Okay, why the branch stock is receiving it, because this is representing the head office and this is representing the branch. So when they send it, the branch stock is receiving it, so it will be goods sent to branch as 360,000. So that is that. The next one, goods returned to head office by branch. Now probably as part of the goods that was sent was returned by branch. So when there's return by branch, the double entry will be you credit the branch stock account and you debit the goods sent to branch account. So it will now be goods returned. Okay, goods returned is 36,000, and here now will now be goods returned by the branch stock. How much? 36,000. Okay, the next one, they said credit sales, 300,000. And the credit sales now will involve the branch debtors since it is not cash. So we'll have the branch debtors. So credit sales here now, we have the branch debtors for sales as 300,000. So the branch debtors here as branch stock as sales, credit sales, 300,000. Okay, so the next one, cash sales, 96,000. Now for cash sales now, we will now have our cash account. Okay, so we'll have the cash account. So for cash sales, it is still sales here. So we'll have cash account, which is sales. How much? 96,000. And the corresponding entry comes to the cash account. Okay, as so say the branch stock as sales, 96,000. The next one, authorized allowances of selling price. It wouldn't come there. Okay, it will not come there. The next one, goods returned to branch by branch customer. Goods returned to branch by branch customer. Now the branch customer is a branch debtor. So the return goes to what? To the branch. So since they are returning, it is leaving them. So we are going to credit their account. So we'll have a branch stock. How much is it? 20,000. They are returning the goods back to the branch stock. So here will now be branch debtors, 20,000. Okay. The next one will be cash discount allowed to branch customer 10,000. Cash discount allowed to branch customer 10,000. Now said when this happened in terms of discount allowed to branch customer 10,000. Now the double the account involved will be a branch debtors and a discount allowed account. So we'll open a branch discount allowed account. Okay, so if you open that, now the credit entry will be at the customer. So we have the branch discount allowed. How much is it? 10,000. 10,000. When the corresponding entry comes here as the branch debtors as 10,000. So with that, we have done the double entry. You see, each of them have their double entry recording. Now the next one, branch bad debt written off. Branch bad debt written off. The bad debt involves the what? The debtor. So the same way, you credit the branch bad debt. How much is it? 8,000. Now open a bad debt account. So I have branch bad debt account. So the credit here, the corresponding debit will come here as branch debtors as 8,000. Okay. Now the next one will be cash received from branch customer 200,000. So if they receive from branch customer, it means we'll credit it as branch customer. We can just write cash. $200,000, and it comes to cash account. Branch debtors. The cash received is 200,000. Okay. Now the next one, branch sundry expenses paid by head office. So we're going to open another account called the branch sundry expenses. So it was paid by the head office, and the head office paid it through cash. So just right here, branch sundry expenses. How much is it? 25,000. Now come here and write cash 25,000. Now cash stolen at branch. Now they stole cash at branch. Now it has to pass through the branch stock account. So we write here and write it to the profit or loss account. So it means we have to open a branch profit or loss account. So write the cash stolen at branch 5,000. So our branch profit or loss, that is cash stolen 5,000. Okay, so write it there. The corresponding entry comes here as the branch stock. It is cash stolen 5,000. The next one, goods stolen at branch 12,000. The same process, write it to the profit or loss account. Goods stolen 12,000. So the corresponding entry comes here. The branch stock, the reason is goods stolen 12,000. The next one, you have closing stock at branch 44,000. So the closing stock, they say we should write it to the what? Credit side. So we'll write it here as balance carry down of how much? 44,000. Okay, so that is the recording. Now let's close this account. So we're going to close this account. So now if we add up what we have here and here, remember I said we are closing this account to the what? To the profit, gross profit. So we have 36,000 plus 300,000 plus 96,000 plus 5,000 plus 12,000 plus 44,000. So we have 493,000. Should be greater than this. So if we add this, we have 360 plus 40, 400,000, then 420,000. So the balancing figure will now be the branch gross profits carried down. Okay, so this is supposed to be 493,000. So 493,000 minus 420,000 will give us 73,000 as the gross profit, because the credit side is greater than the debit side, so we have a gross profit. So this gross profit will be brought to profit or loss account. So we'll have here branch gross profit brought down as what? 73,000. Okay, so we have closed this account. Now we'll come to this side to close this account. We have this and this, so the credit side is greater, so we'll close this account to the purchases. Remember, it is goods sent, so it's closing to the what? Purchases. So this is 360,000. So 360,000 minus 36,000 will give us 324,000. So that everything here will be 360,000. Okay. Now the next one is branch debtor. We're also gonna add it, the branch debtor. So this and this, the debit side is greater, so we have 300,000 here. So if we add up this, 200,000 plus 8,000 plus 10,000 plus 20,000. Okay, that's 238. We subtract it from 300,000. So our balance here will be balance carried down as what? 62,000. So this is 300,000. Okay, and the next one, the cash account. Now to close the cash account also, this will give us 296,000. Okay, at 296,000 minus 25,000 will give us a balance carried down of 271,000. Okay, so this is the cash in hand, 271,000. So we'll come to the branch discount allowed. Now we'll close this account to the what? Profit or loss account. So we are closing it. So this will now be branch profit or loss, 10,000. So we'll close it, 10,000. Now the corresponding entry will now come here as branch discount allowed, 10,000. Okay, we'll do the same for here. Branch debtors, since that expenses, we are closing it to profit or loss, 8,000. The corresponding entry comes here as branch bad debt, 8,000. Now the branch sundry expenses also, we close it since an expenses to profit or loss. So this will give us the branch sundry expenses as 25,000. Okay, so now we're going to add up. This is 73,000. So if you add up the debit side, we have 25,000 plus 8,000 plus 10,000 plus 12,000 plus 5,000. That's 60,000. So the expenses, we have gross profit of 73,000. Why expenses is 60,000? So it means our net profit is what? 13,000. So that when you add everything together, it gives us 73,000. So that is how to balance and solve this. Remember, this alone is using the what? The cost price method. Okay, the cost price method. We are not saying the cost price plus percentage and also selling price. It means this is a series. So ensure you subscribe to this channel so that you see other ones we are looking at. Ensure you like, please comment. Okay, please comment. Now we are on Facebook, we are on Instagram, we are on TikTok at The King's Tutor. So follow us on those platforms. Thank you very much.